Thank you, Senator Bennett Johnston, Jr., for your kind introduction. Ambassador David Merrill, President of United States-Indonesia Society, Alexander Feldman, President and CEO of US-ASEAN Business Council, distinguished guests, friends of Indonesia, ladies and gentlemen, good evening. It is my honor to join Minister Luhut and Minister Sri Mulyani to share with you on Indonesia's latest development and voyage to Indonesia. Allow me to add on the elaboration that has been conveyed by Minister Luhut and Minister Sri Mulyani. Minister Sri Mulyani has pointed some improvement in recent Indonesia economic indicators. Allow me now to take a longer-term perspective, back to 20 years ago, when the Asian crisis hit our country and the economic condition was totally the opposite as it is now. In 1998, credit boom and imprudent behavior of private and public sector, including banks, had driven maturity and currency mismatch in the economy and finally triggered financial crisis in Indonesia. During that time, private sector financed its long-term project with short-term loan, creating maturity mismatch. In addition, under long period of stable exchange rate environment, private sector made foreign currency loan to finance its domestic project that did not have foreign currency income stream, creating a currency mismatch. External debt to GDP was very high at 116% in 1998. In 1998, inflation skyrocketed to 82.4% as Indonesia rupiah nosedived to the weakest level to 16,650 rupiah per US dollar on June 1998 from around 2,500 rupiah per US dollar a year before. Foreign reserve depleted to $17.4 billion and banks' non-performing loan soared to 30%. Now, 20 years after the Asian crisis, Indonesia economic fundamentals continue to improve, and thanks to the macroeconomic policy mix, together with the integrated structural reform and solid coordination among real sector, fiscal sector, as well as monetary and financial sector, to drive economy navigating the challenges and achieve strong, sustainable, balanced and inclusive economic growth. Ladies and gentlemen, from Bank Indonesia's side, Bank Indonesia policy mix focus on efforts to maintain macroeconomic and financial system stability. The policy framework adhered to is the inflation targeting framework adopted since 2005, which then enhanced with the financial system stability aspects. Decisions related to the stance of monetary policy are consistent with that framework, which aim to maintain internal and external balances. Although the policy framework has not changed in the past few years, we have instituted a reformulation of monetary policy operations framework to improve the effectiveness of monetary transmission, which consists of three pillars. One, the introduction of Bank Indonesia 7 days reverse repo rate. The second, implementation of reserve requirement averaging. And third, financial market deepening. Last year, we introduced Bank Indonesia 7 days reverse repo rate, new policy rate replacing Bank Indonesia rate. Monetary operations were also refined considering the recent conducive macroeconomic conditions, which provided impetus to strengthen monetary transmission. A year after the shift of 7 days reverse repo rate benchmark, we have seen significant impact on the transmission mechanism, which include, one, the operational target has inched closer toward the policy rate. Second, the money market rate, interbank call market rate, repo rate, and JIBOR for terms up to 1 month have converged. Third, activities in the interbank call market have increased, as represented by volume, number of participants, and number of transactions. This year, we introduced reserve requirement averaging to enhance banking liquidity management. Unlike the current reserve requirement system, the reserve requirement averaging system requires only the bank to maintain the average adequacy of the reserve requirement in a maintenance period. With this leeway, the policy is expected to create more active interbank transactions and more stable interest rate, thus strengthening monetary policy transmission. Ladies and gentlemen, to support the resilience of the financial system, Bank Indonesia has undertaken several initiatives to accelerate the deepening of financial market. Aspects of development includes instrument, investor base, and financial market infrastructure. Enrichment of instruments and investors base, both in the money market, the foreign exchange market, and the capital market, will deepen market liquidity and improve the efficiency of economic transactions, while infrastructure development will ensure the sustainability of transaction and mitigate operational risk. Bank Indonesia, together with the government, will reinforce policy mix in order to maintain stability and strengthen economic recovery momentum, including momentum from global economy. Entering the second half of 2017, the global economy is expected to grow at modest pace, 3.5% in 2017 and 3.6% in 2018. In the US, economy continued to pick up modestly, although lower than expectation. In the emerging economies, China is expected to post stable growth in 2017 and 2018 at 6.7% and 6.5% respectively. At home, macroeconomic stability and conducive environment have been maintained and economy continues on strong footing. The GDP grew by 5.01% in the second quarter of 2017, indicating continued recovery process